Alright, welcome back to another video. In today's video, I'm going to show you how I caught a 3-hour trade on EURUSD on Wednesday. Okay, we've used stuff like SMT, liquidity concepts, daily bias, London protraction cycle. Okay, so we're basically going to go ahead and show you how I used all these concepts together to go ahead and find a high probability trade, right? So we start on DXY. Right, the trade, I'm not going to put us in replay mode, but the trade I was looking for was on Wednesday, right? So I was looking to actually see a bearish day print on Wednesday, right? And this is key, right? Just because we didn't get a bearish day doesn't mean you can't make money, okay? So I'll show you exactly sort of what that looks like. But basically, we wanted to see these or all this sort of low resistance liquidity get reached for, which we clearly did. That's our draw on liquidity. Specifically, our draw was that weekly FEG, which you can see got tagged, which was sort of mentioned in my Outlook prior, which I give out for free on my Telegram. Okay, I'll link that in the description. So, simply put, right, this is Wednesday. Okay, prior to Wednesday, we had these really clean equal highs. Okay, and also based on the daily time frame, we can see how we've raided out liquidity, failed to close beneath this, and then we have shown support via bullish arrays. If I mark this on here, right? So this was an old bearish array that should have been essentially acted as resistance, right? We should have seen sells from this level. We've closed through it, and then we've supported it with 1, 2, 3, 4 bullish candles and a huge rejection away. So after we do that, right, we then want to see, or it basically denotes a big shift in price. Okay, it denotes the fact that we were in this sort of lower lows, lower highs type environment. We had a failure swing, and then we've pushed higher, okay, creating equal highs. So that's why our bias was these equal highs, and obviously the bias on or the draw on DXY was valid as well. Okay, so after Monday and Tuesday, we'd created equal highs, and we wanted to see buys continuing on Wednesday. Okay, if we go ahead and break down the order flow on the intraday time frame as well, I'm just going to put a line on the chart just to delineate where you don't need to focus on anymore. So anything past this line you don't need to look at anymore. So we had 4-hour FEG, right? So again, when we're looking for the day to be bullish, we want to see bullish arrays acting as support. Yeah, so we understand that this is a really important array, this 4-hour BISI, right, where you can see we've tagged that, then pushed away as well. So let's go and drop a bit more. Okay, now let's put the sessions on. So as you can see here, we've tagged the H4 array. We then went ahead, swept out Asia. Let's make this thick. And then we've run away from that. Okay, if I hop over to GU, I want to show you the SMT here as well. So EU and GU are correlated, which means you are going to see times in which GU will, for example, make a new lower low, whereas EU won't. And this will be a correlation that we can use to further support our bias. Okay, so this low here, 23.15. Okay, if we just mark this on, and this low here, 6.45, right, roughly. If we match these up, 23.15, and you can see the low gets made at a slightly different time, right? On this, it gets made at 7.15, which is fine. But what I'm trying to highlight is the SMT. Okay, so we've got one asset that has failed to make a new lower low, and GU on the other hand has easily crushed out all these lows. Okay, so all that means is that Euro is stronger. We want to see buys on Euro, preferably. Okay, because we understand that the strength is with Euro. Let's Okay, so another thing to sort of add on, this is a London protraction cycle. So we like to keep things very simple, right? If you just break down exactly what we've done, we've identified a day in which we want to see bullishness, okay, which is Wednesday, and giving you the reasons for that. We then want to see a retrace into some sort of higher time frame-ish PDRA, let's say H1 minimum. We've retraced into a H4 BISI, knowing that we're going to see push away from there. Then S&T isn't a necessity for me, to be honest, but it's a very, very nice confluence if we do have it. Once I see sort of price play out like this, or sorry, once I come to the chart in the morning and Asia has consolidated, I am then looking for Asia to get swept and then a CSD. Very simple. So that's how I work in my London protraction cycle. Okay, so again, you can clearly see Asia gets ran out, right? I don't mind it happening before 7. That's completely fine. We then get a push higher, leaving a FEG, and you can clearly see how we've changed the state of delivery here. So we've had the 50-minute trending lower into this liquidity pool and then switching from bearish to bullish. Okay, simply put, order block formed, right? So again, you can look at it like a CSD, like an order block. It really doesn't matter. I'll jump down to the 5-minute because that was actually where I was trying to enter. So on the 5-minute, I really like to see, well, on the 50-minute as well, I like to see a strong closure above a swing high, okay, which again is just a market structure shift mentioned a ton of times in the 2022 mentorship. But basically, when we get this displacement above a swing high, for me at least, I'd say it's my favorite entry confirmation. It just gives me so much confidence behind the trade. So we got the displacement, and to be honest, right, so I left my limit on. When we started running high, I thought that we'd gone, right? I thought potentially this isn't going to come and put me back in. However, I was aware, and this is really important, that my trade, if we were to come and tag me back in, is still valid. And this is why, even after this market structure shift and then where I put the limit on here, and we ran away, so for, what's that, about 25, 30 minutes, nearly an hour, we were running against me, or not against me, we were running in my favor, but I just wasn't inside on the trade. I was still aware that, like, okay, cool, this trade is still valid for me. If this does come back, wick me and push higher, I still need to keep my limit on because, like I said, the idea is still valid, yeah? So I kept my limit on. We obviously, price comes back down, tags us in, and then I look to take profit at the equal highs, okay? So as you can see, the equal highs that we marked off at the start of the video, that was exactly what I wanted to see get reached for. You can see we actually do reach a little bit more, right? I think we go to like a 6R, which is crazy. And then I did want to see a New York continuation as well, which we didn't get. Okay, all good. So key lesson here really is like understanding where your invalidation areas are for your setup. So like for this, there's 2 things that can invalidate the setup for me, right? Number 1 is going to be obviously if we go ahead and go lower and then take this low out outside of specific time. And the second one for me is timing. Okay, so if we start to approach the end of the session, right, because I'm predominantly a session trader with regards to this London protraction cycle, but I'm more hesitant, or not even hesitant, but I have a specific time window in which I want to execute within, right, which is pretty much the first 2 hours. If we got past 9, okay, then it basically becomes a different cycle and I'm looking for something else. So pretty much, right, if we create a low in the first 2 hours / in between sessions, it's cool. If we start creating the low in a different time period, it switches up things. Okay, so that's what I meant by my execution window. Okay, so the other thing to note as well, and I think this is where I see a lot of people want to catch these really big R2R trades, which is obviously something I used to be a fan of a couple years back. The best way to do it is to understand your scaling opportunities, right? So let's say you've entered in on this trade, okay? let's say by the time we've made a displacement above a swing high that you're okay to say that we don't want to come back down here anymore. You then price offers you another entry. So technically speaking, this is a market structure shift plus FEG. This trade is identical. This is a market structure shift, okay, above a swing high, new swing high, plus FEG. Okay, so at that point, we could go ahead, enter, same rule set, same stop as the second trade, right? And you've actually effectively doubled your R on the same move. Okay, so this was a 3R. Let's say this is a 3R. Now, you may not have wanted to go in with 1% risk again, which is completely understandable. I would prefer a 0.5, to be honest, in and around this level. But the key thing to note is, like, you can go ahead and get double the R, right, by just optimizing in for these scalings, right? So the methodology behind it, right, is, and you would have heard this a million times, you want to cut your losers short, but you want to let your winners run, and you want to basically add to your winners. Like, if price is really running aggressively in your direction, then you want to go ahead and add to these, right? So the other thing I've realized is, well, you have to be very comfortable with risk, okay? Because if you think about it, let's say you're in this position, let's say you've been really worried, the price has been playing around. Once it's entered you in, you've sat in this trade for, I don't know, 45 minutes. It's just been playing around inside of your area. You've been a bit anxious. Once price runs away, right, you've got that sigh of relief that your trade, let's say, is now at break even. Let's just say your rules were that once we make a new swing high and we go above that, with displacement, you take to break even. You're not going to be as willing to add risk on here, okay, because you've been so panicked and nervous and in a rush to get your trade to break even, to the point where when another trade is offered, you're not going to want to put more risk behind this trade. Okay, so that's another thing. In terms of scaling in, you really need to get comfortable with losing, with being wrong, with letting your trades or letting your ideas fail. And also, you want to be careful with these scalings. Like, if price isn't running in your favor aggressively, if it isn't showing you the process and the idea that you're on side, then you don't want to be getting in on these scalings. Okay, so yeah, scalings for me, I think that's something big that basically I'm working on this year. I really want to be able to capitalize on these scalings, right? This scaling I didn't play, but I played this original trade for 3R. So yeah, hopefully you guys enjoyed that. If you do have any questions, then go ahead, sort of answer or ask in the comments, and yeah, I'll be happy to sort of answer those. So anyways, hope you guys enjoyed that, and I'll see you in the next one.